Most people miss great opportunities because of their misconception of time. Don't wait. The time will never be just right. Stephen C. Hogan. My friends, the time to start learning how to read these charts is now. Don't wait a single day later. All you have to do is commit yourself 10 to 15 minutes a day following these charts with us, practice trading, and the best news is it's all free. If you'll go to the page and sign up at chartingwealth.com to get our daily reviews and our once a week weekly review and forecast every day, you'll also receive one of our special trainings. The special training we have for you today is about mastering the charts. It's entitled How to Master the Charts. I recorded it myself. You will get a great deal from it. It talks about the weekly vertical crossovers that we look for. That's when our price percent oscillator crosses over the red signal line up or down. In fact, that's a 2-day cross. I'm going to show you the weekly cross. The nice thing about these weekly crosses here is they're typically extremely accurate. You can go back in time. There are times when the market will jig sideways and get sloppy, but it is very rare when you look back in time at the charts that we follow. And again, we follow 4 charts: the S&P 500, the Nasdaq 100, both of those were up today, along with 20-year bonds, TLT, and gold. These are ETFs, exchange traded funds. They act like stocks, they look like stocks, they trade like stocks. They're highly liquid, which means it's easy to get in and out of them, and you can practice trade them every day. In fact, I'm going to put at the end of today's training how to use our daily market worksheet, trade worksheet, and weekly market worksheet. You fill out the daily market worksheet 4 days a week and the weekly market worksheet over the weekend. It helps you see what's going on, putting pen to paper. Those PDFs are in your show notes every day for free. Everything we do here is for free. Yes, occasionally I will offer a special course, an intensive, which we did just before the holidays. Well, we actually finished it up a little earlier than that. I've got to get up the energy to do that because I put all I have into it. But again, to start off, just start now. You will understand it as you do it. And again, as Mr. Hogan says, you've got to start now. You can't just wait. You'll miss the great opportunity. A year will go by, 2 years, 10 years, 20 years, and you'll say, man, if I just would have started. I mean, think about it. Do you have friends that have mastered musical instruments, and at the time they started, you could have too? That was 20, 30 years ago. For those of you who are young, I'm telling you, you will lose it if you don't get out there and use it. So commit yourself as we get to the end of this year. Don't wait to the beginning of the year. Start right now. It takes a commitment. I tell you, if you're not going to commit yourself, then I hope you just enjoy hearing my voice every now and then, because that's about all you're going to get as far as benefit goes. It takes diligence. It doesn't take a lot of time, 10 to 15 minutes a day. Let's jump into these charts. Enough said there. I keep urging my friends because, again, perseverance I see getting close to 60. I'm 59 now. 59 years young. I feel as young and strong as I was as a Marine. I can still do as many pull-ups, probably more pull-ups and more push-ups. Don't run like I used to. I just got tired of that. But again, you're only as young as you feel. And my friends, you just have to put the time in to get the benefits, whether it's physical fitness or it's learning how to use these charts. Please do it. Perseverance is what is so lacking. Perseverance. So persevere. You can do this. I'll be your biggest champion. We see everything up, as I said before, except gold. Let's look at the S&P 500 up 0.86% for the day. Starting this week off nice. Oops. Let's go. I was on gold. Starting this week off nicely. We see that we are reaching a higher high. And we had last week was a doji. That price percent oscillator is flat. Derivative oscillator losing some momentum. Now remember, we were taken out of the S&P trade. Why? Because we had that 2-day crossover going down. Now we have just moved a little higher than the high we reached back on the 17th of December. and we will have to have a 2-day recross to get us back into any move up on the S&P. But the S&P was good to us, friends. It struggled to get going, but if we look at that weekly chart, we can see where we had that weekly crossover back on the 13th of November. Next week, not so good. Next week struggled, but then starting on the week ending the 4th of December, we had 3 good weeks going. So again, things slowed up last week. We had that 2-day recross. Now we're just waiting to see what's going to happen with that. But again, the price percent oscillator is flat negative. Derivative oscillator is about flat too. We go to the half-day chart. Just crossed over in the morning and then a little bit higher in the afternoon. So that's good to see how we want to see things go up. It's always nice, and we'll have many opportunities to, again, ride the gravy train when the charts tell us to. And the reason we do what we do is because we have, over time, found out that the rules we set work over and over and over again. And again, what do we strive for? My friends, if you can make successful practice trades every month, 2% is your goal. You know what that ends up being in a year? 24%. Now we only really strive to hit that 20% mark per year. You start doing the math on that. If you can consistently get your practice trades up to that area, and then at some point transition over to real money when you have built the skill set you need, you'll have all you ever dream of. Now, what's going on with the Qs? Well, the Qs crossed over going up back on the week ending the 18th of December. We saw things move on going up that next week, and so far this week, moving up, we're still close to laminated on that price percent oscillator. It just doesn't want to move, but we see the derivative oscillator heading up. What's going on the 2-day chart? It's fairly flat on the price percent oscillator. Also, that derivative oscillator actually gained a little bit. Now, it's only the first day of this latest weekly candle, but it is up quite nicely, and that is good to see. So again, we can see price movement going up, and I've already actually converted over from that's the weekly candle to the 2-day candle. Now remember, that latest 2-day candle ended on Thursday. So again, we'll continue to watch and see how this new candle develops as it continues to go up on the 2-day chart. Like I said, the derivative oscillator gaining momentum. What about the half-day chart? Up in the morning, further up in the afternoon, crossing over, going up in the afternoon. That is good to see. Let's see if we can redraw that for ourselves. Easy enough to do. Now that we've had that crossover occur, we'll continue to track it, see how it goes. Now, let's move on to 20-year bonds. What do we see going on there? Well, we had 3 weeks of down movement. However, we can see that we peaked this last week on Dow. Well, we actually have had, again, remember when you see solid green, that's actually 4 weeks of down movement. That solid green candle is a slowdown in the down movement. But after things peaked that week ending the 27th of November, things rolled over. Now, so far this week, not reaching a lower low. Price percent oscillators about flat. Derivative oscillators negative, but losing downward momentum. We look at the 2-day chart. What do we see there? Well, that 2-day candle crossed over going up back on December the 11th. Then it, let's see, did it peak? What was the high? 159.39, 150, yeah. So it peaked actually on the 11th, that 2-day candle ending Friday the 11th of December, and rolled over, but not enough energy to cross over going down and bounced off the red signal line. So again, that is still positive and up. It's that weekly that is down. We see, again, losing downward momentum on the price percent oscillator and the derivative oscillator. Go to the half-day chart, and again, down in the morning, recovering some in the afternoon, making it up for the day, 0.04%. And that half-day chart is still positive also. And we can try to redraw that half-day chart a little bit for us. Let's see what we can do about grabbing that. There we go. We'll bring that on over. I'm using, for those of you not familiar with it, I'm using the paid version of freestockcharts.com TC2000. Absolutely wonderful. I love it. There is a coupon there's a link for $25 off if you do desire at some point to get serious and get engaged and subscribe to the paid service of freestockcharts.com TC2000. We also have a link to the chart that you see that I use every day. When you do subscribe, you can use that link and you'll get just the charts that we look at every day. Now, what's up with gold? They're only downer for the day, 0.36%. What do we see going on with gold? Well, we see a green candle forming. Again, the first day of this weekly candle. Price percent oscillator is about flat. Derivative oscillator losing negative momentum. Now, we look at the price percent oscillator. It is still negative, so we still have overall a down move in gold. Okay, we have that downward pressure. That's a better way to put it. Even though we seem to be going into our third week of up movement so far, we look at the 2-day chart. And again, we can see where things peaked in gold at 177.87 back on the 2-day candle ending Thursday the 17th, and 177.91, 177.87. So we did hit a bit of a higher high. That's why you'll see me call up these boxes on the left and check myself, because sometimes the eye can be deceiving. And again, I was deceived. It was up a few more cents, 3 cents to be exact, 4 cents to be exact. But again, has reached a little bit higher high, just moving up that 2-day trend line. Derivative oscillator losing a little bit of momentum, as is the price percent oscillator on that 2-day chart. But that again is good to see. I'm hoping that there'll be enough energy in that 2-day to pull this weekly over at some point. I'm ready to jump into gold and ride it up. What do we see on the half-day chart? Well, not the same. It peaked in the morning, and then over in the afternoon, not enough energy to cross over, so it is still negative. Again, that half-day chart is still negative. That's where we are as we end the day, folks, as we move closer to ending this most interesting of years. One of the most interesting I've seen in my lifetime. I'd have to go back to very early in my life, to the Kennedy assassination, or maybe when we had 9/11, maybe those events were as interesting and weird as this year. But again, very, very interesting what we are seeing. And we'll continue to watch and see how this market moves. The good thing is, my friends, what I care about most when it comes to my trading and investing, this practice trading we ask you to do, is, are our charts accurate? Can we follow them successfully? And the good news is, regardless of the craziness that's been going on, regardless of how you feel about the inflation of the marketplace, the money printing, the quantitative easing, the craziness, the giveaways and all that, as long as these charts work for us, that's what we need in order to follow them. We need them to work and to be accurate. And as long as they are accurate, we'll continue to do our work successfully. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.